Hi, Minnesota. This is Christie Thompson with Christie Legal. I am a divorce and custody mediator and paralegal in Minnesota. I help people divorce and handle custody cases with less conflict, less cost, and in less time. And I'm here today with a panel of other professionals who you need to know if you're going to divorce or separate in Minnesota. And because the legal stuff is just the tip of the iceberg. So, folks, if you could please introduce yourselves in alphabetical order by first name.
Well, since I'm Ann with an A, I guess I go first. I am Ann Carter with Summit Mortgage. I am a residential loan officer, and my little tagline is putting dogs and kids in yards one home loan at a time.
Hi, everybody. Ben Millard with Unconditional Living. We are a community of people who want to be, do, and have more in life. And we help teach, coach, and mentor people to make the most of themselves, which you may not think applies to you in your current situation, but we'll talk about that a little later.
Hi, my name is Melissa Dietz, and I am the realtor of our presentation today. I am with Realty One Group Choice, and I help buyers and sellers in the metropolitan Twin Cities area.
Thanks, folks. Patrick was not able to be with us today. He is an insurance agent, and I will be putting his information in the chat box and everyone else's as well at the end. So you can contact all of us for a free initial consultation. Christie Legal helps folks divorce and handle custody cases in a way that saves them tens of thousands of dollars and at least 6 months in the divorce process. I'm able to do that because I'm a mediator and a paralegal, not an attorney. So I can work with both parties. And I help them reach agreements on all the issues. And then I write their legal documents. And then I help them through the court process. The court process, when you're doing an amicable divorce, is extremely simple. If you folks don't have children, then literally you just mail the documents that I wrote to the court, and the court will mail you back a notice of dissolution of marriage, and you're divorced. Takes about 2 to 4 weeks. And then if you do have children, you do have to have one hearing. It'll take about 2 months to get the hearing. The hearing will be about 15 minutes. That is nothing compared to the divorce process if both parties lawyer up and battle it out. It's normally at least a year in the divorce process, and we're talking a minimum of 3 hearings and a minimum of $10,000 per person. So you don't want to go that route. So let's talk a little bit about what happens legally during the divorce process. There are 3 main things. The first is the division of the assets. Normally, the largest asset is the home. And so when I talk to my clients or prospective clients, the first thing I ask is, do you have a home? And if they have a home and someone wants to stay in the home, then I ask them if they have spoken to a mortgage banker, because a lot of times the person who wants to keep the house cannot afford to keep the house, and a mortgage banker would be the person to tell them that. And then if they cannot afford to keep the house, or they just don't want to keep the house, then I ask them if they have a real estate agent. And, sometimes they do, sometimes they don't. And we have Anne, who's a mortgage banker here, and Melissa, who's a real estate agent, and they will be telling you lots more about that in a bit. And so what we do when we're divorcing is we take the value of all of your assets, the house, the retirement funds, the vehicles, the household goods, jewelry, everything, and we add it together. And let's say all of the assets total $500,000. Then by law, each of you are going to get $250,000 approximately worth of assets. So I start by saying, who wants what? And then we put each of those items in each person's column. And then we see, is it kind of equal or is it really unfair? And we need to do some shifting of equity in the home or retirement funds to make it more equal. And you folks, because you're being amicable, you don't necessarily have to do a 50-50 division. You can, if you both agree, do a different division if you would like. And then we need to divide the debts. So debts are divided according to ability to pay. And what that means in regular person terms is how much each person earns compared to the other. So if one person earns $100,000 a year and another person earns $25,000 a year, then the person who earns $100,000 is going to end up paying way more of the debts than the person who earns $20,000, and because that person has much greater ability to pay. And it does not matter who created the debt. You folks are married, so you are legally and financially one person. All the debts that you create during the marriage must be divided during the divorce. Now, again, you guys can choose to divide the debts a different way, and if you both agree on it, the judge will probably let it fly. And the third legal thing that you do during divorce that's a really important thing is figuring out how you're going to share the kids and if there will be child support or not. So, some legal terms here. First, we have legal custody, and that means who has the right to make decisions about the children's medical, dental, mental health care, education, and religion. And 90+% of the time, it is joint legal custody because it's really very difficult to take away someone's parental rights. A parent would really, really have to mess up. So normally it's joint legal custody. And then there's physical custody. And that means where are the children physically? Are they with each parent 50% of the time, which is joint physical custody? Or are they with one parent more often than the other? In Minnesota, that's called sole physical custody, which is really a misnomer, but don't get caught up on the terminology. It just means that the children are with one parent more than the other. And don't get caught up on labels. What you're doing when you're deciding the custody and parenting time is you're thinking about the best interests of the children. So don't get caught up on labels or, oh, this person has more parenting time. We're going to talk about work schedules, how often each parent is out of town for work or pleasure, and various things. And then you guys will reach an agreement on the custody and the parenting time. And part of that, of course, is the child support. And you folks can use the government calculator, which you can just Google and find online. Just pop in Minnesota child support calculator and you can find it. Or you guys can reach an agreement of your own because you're being amicable. And so those are the really boring legal things about divorce. And so now let's talk about the financial stuff. And we're going to start with Melissa talking about houses. We're going to talk about both. If you want to sell your house because either you don't want the house anymore or neither of you can afford to keep it. And then buying a house. If one of you is going to keep the house and then the other one needs to buy a house. Thanks, Melissa.
Thank you, Christy. So yeah, the current home and the current resident that the family has right now, if you've decided that you're going to sell that home and take the equity that you have, split the equity, and maybe buy your own homes as separate entities, that is a good solution. Maybe the house that you're currently have right now is much bigger than you're going to need, or it's just too painful to be in that house. There's various reasons that you may find. that you want to just move on and start afresh. And that can be done really pretty simple. We can even make it happen all on one day, meaning the closing part of the property. So, and I've even worked on this and had clients in the past. So you're going to sell, you're going to get your buyer, you're going to go out shopping, you're going to get your offers on your new homes, and then and then close all at once. You'll close on your current resident in the morning, and then you will purchase later in the afternoon. And in many times, especially in today's world with the COVID and stuff, everyone that is a seller generally pre-signs up to a week prior to their closing date. So that aspect is done. You get up on the day of closing and you're going to finish your packing and getting everything cleaned out of the existing home, and then head to your separate closing tables for your new properties. So that works out really, really well. If one decides to stay in the home, that's wonderful. And then the other one, the other partner or the other person can also go shopping and go take and find a home of their choice and close when you can get to the closing table. Remember that one of the sticky points with real estate is that it takes 1 to buy and 2 to sell. And so waiting, you don't necessarily have to wait until the divorce is final, but you do want to make sure that when working with Christie, that they're and with the loan officer and all people involved, that it is understood that if you're buying while married, they can't come behind you and try to claim your asset on you because you're technically not divorced. So that is very important that you make sure you have all the right documentation in line so that that cannot happen to you. But hopefully, if you're with Christie and you're in an amicable divorce, people will be willing to sign document and in whatever legal representation they need in order to preserve their new asset on the backside. So, but you want to make sure that you discuss that. And even if you're going through any other lawyer, you want to make sure that that is being discussed as well. It's not just with Christie, it's to make sure that you're protecting yourself. And yeah, it's a pretty simple process. It is a seller's market right now. So it might be in the best interest too for all parties, depending on your current location, to sell that bigger home for a lot more money than you would possibly turn around and buy. And downsizing or just moving locations can make a big difference as well. If you're on the north end of the Twin Cities market to the south end of the Twin Cities market, or east west, or even if you go just slightly outside the market, the Twin Cities hub, such as like a St. Cloud area, or maybe up into an Isanti or a Cambridge. I know sometimes people want to move back home, so to speak, and home might be Duluth. So again, selling that asset and moving back home to Duluth might actually be the better solution for the whole family unit as a whole. And you can cash in on some of that equity that you've got built up in that nice Andover house or that nice Lakeville home or something of that nature. So that's not a bad thing to truly consider, especially in today's market, given that the value that you probably have sitting in your current home is pretty darn great right now. So, but yeah, it is a tough situation to be in when you're going through a divorce, but it is a manageable one that you can do, and people can walk away knowing that the family and stays as whole as it possibly can with as little disruption as possible. It is a doable thing. So with the right realtor and with the right coaches and with the right legal expertise, it can be done. So if you need any help, I would for surely love to answer any of your questions. You can put it down there in the comments and we can see how we can get you on the right path. Thank you, Christie.
Thanks, Melissa. And Anne, could you please talk to us about how you help people actually buy those houses?
So I wanted to chat a little bit about credit, because credit is so important today. Your credit score, how much credit you carry, it's all very important. And the credit, your credit is looked at when you're renting, when you're buying, when you buy a car, when you get car insurance. There's so much. It's so very important in today's society to have decent, good credit. So you want to, if you know you're going to get divorced, get organized financially. Get all of your stuff in order, because typically one person pays more of the bills. They just handle it. It's just typical. It doesn't mean that the other person can't. It's just that it's easier. So make sure, if you're not that person, that you understand, where is all the money, where's all your money, what are all the bills, both for the household type bills and for all your debts. And then you need to start getting the passwords and all those things lined up too. So if, like Christie was mentioning, if you have all these debts and you don't want to divide them 50-50, or you don't want the courts or whoever, the law, to divide them 50-50, then you want to make sure that you go ahead and say, okay, if this is his account, his credit card account, and that's his responsibility, then this one is yours. Then you contact that servicer, that card holder, have your name taken off, and actually have it put all in his name. It might be better to actually have a new account, roll it over to a new account number, and without your name on it. And then you do the same with the other one, so that that person is no longer financially responsible, including you are no longer financially responsible for that person. You have to remember that lenders and creditors don't really care that much about the divorce. What they care about is who's on the bottom line. So you may have gotten divorced, and the divorce decree may have said that she was responsible for this payment and she didn't pay it. But if his name is still on it, they'll come to him if they can't get it from her. So it's very important that you get things closed and renamed, or your name off it legally, so you don't have that coming back to you. Make sure you get a credit. You can go to annualcreditreport.com, get your credit report and look at it before this all starts. Make sure you see what's out there and see what's going on. And then you want to keep checking it. Right now during COVID, you can check it once a month for free. Normally it's once a year per each bureau for free, but during COVID, you can check it once a month with each bureau for free. So that's a good deal. You want to make sure, if you are a spouse that doesn't have a lot of credit in your name, make sure you do have something in your name. Get it in your name, so you can start building credit. If you can afford it, open a new checking account with only your name and start having your check put in there. And make sure that all auto withdrawals are switched over to yours if that's the case. If you're the more responsible one, you know that person's not going to pay it and you can afford to, get everything switched over, so that at least you know nothing's going to go wrong. And then when everything is changed over, make sure you change passwords, or choose passwords and pins. Don't forget the pins. Choose ones that your spouse won't guess. Now, maybe it's an amicable divorce and it won't be a problem, but you don't know. So those are the things. And credit is so very important when you're buying a house, a car, anything. But the other thing to remember is what you could afford on 2 salaries, you may or may not be able to afford on 1. And if you are going to get child support, then it has to last. You have to have been having it for 3 months for some investors and 6 for others who have to have been receiving it. And the other thing is that if you have a child who is 16 or 17, then you can't count the child support that they're getting as income because it won't last for at least 3 years. I'm sorry, I'm kind of winging it here. The other thing to remember when you're trying to figure out what you can afford is when we as lenders figure the amount you can afford, we take your gross income and divide that by 12, your month, and that's and then multiply that by a number. But when we're working to see how much you can afford monthly, we're starting with your gross. Well, remember, that's not what's really coming home. So even though you might be able to afford the $250,000 on your gross income, it's not necessarily a good idea because that could be, instead of 40%, it could be 50 or 60% of your take-home pay. So you just don't want to be house poor. And as Melissa was talking, it is a seller's market. It might be a good time to go ahead and sell the house, have some cash to be put aside in a safe place. It's okay to rent. It's okay to rent an apartment. It's okay to take some time to find out what you want your next step to be, because this is a very hard time. And Ben's going to talk more about taking care of you. But if you have questions, if you think you really want to stay in a house, or you both want to, one wants to stay in the house and the other one wants to buy another house, and you need to refinance to get them off, give me a call. Let's see if you can qualify. That's not a problem. If that's what you want to do, I think that's great. And now I think Ben needs to talk to us about all the emotional stuff going on.
I do have one question for you, Anne,
Oh,
and then I'll let you off the hook. I've heard that, houses are going for $20,000, $30,000, $40,000, $50,000 above the appraisal price. So, what do you say to people about that?
okay. So a lot of times houses are going above the sale price, and that may or may not be above the appraisal price. So for instance, I just closed a deal today. The house sale price was $350,000 and the house appraised for $355,000. Okay, that's great because the appraisal is higher than the sale of the home. Now, this was one that I got from another lender whose appraisal came in at $317,000. So it was quite a bit lower. And my seller had said, okay, look, let's switch lenders. Let's go to another appraisal. And if it comes in anywhere between $330,000 and $350,000, which is the sale price, we'll pay the difference. Well, I think maybe they were going to split the difference. Either way, I think the seller said that. Usually, though, it is the buyer's responsibility. So if it comes in if the buyer says, I'll go ahead and buy this house, it's on the market for $300,000, I'll pay $350,000 because they're one of 45 people putting in an offer. And so they want the highest offer. Well, someone says the seller takes that offer and the appraisal comes in at $300,000. That buyer has to come in with $50,000 of cash because the lender will only lend on the lower of the appraisal price or the sales price. So they're going to have to come in with $50,000 cash plus their down payment on the $300,000 and their closing costs. So that's the thing to remember if you get in one of these situations, which there are a lot of them right now with so many offers and people outbidding others. Remember what you're getting yourself. You could get yourself into a sticky wicket.
I haven't heard that in a long time. So Melissa, from the real estate agent perspective, like houses are going, selling for more than, people are asking for, and there's like, I've heard 20 showings a day. What advice do you have for people who want to buy a house right now?
Oh my. Um, Persistence, expectations, um, and being very realistic. Um, Well, yes, houses are going for 20, 30, 40, $50,000 over asking. You still have buyers wanting to submit an offer than less than asking price. Well, that's just wasting paper, wasting time, and um, a good practice exercise. But it's not going to be an offer that's going to be taken serious. Um, so setting the expectations, knowing your budget, knowing what you can and cannot afford, um, knowing, and as far as the price over and the appraisal price, there's an appraisal contingency within the offer that you write. And there's basically 2 times that a buyer could um, cancel their contract and still get their earnest money returned back to them. But it's all based on how you word your offer. And the first one is your inspection time frame and your inspection contingency. Contingency means just that. You're contingent moving forward with your contract that everything in the inspection goes well, or that you can renegotiate or negotiate any type of repairs or anything that happens within that contingency period. And you decide what type of, as a buyer, you decide, or even as a seller, you decide what that contingency period is going to look like. Is it going to be a 1 day, 2 day, 3 day? Back in the old days, it was 10. Now we're seeing, 3-day contingency. So you better have an inspector on dial. Or you waive that contingency, which means I don't care what defects are in the home. I don't see anything that causes me any concern. And so therefore I'm going to waive my inspection contingency. But I still want to have an inspection. You can still do that. But you waive the contingency, basically you're waiving the right to cancel your contract at that point during that window. And therefore you're also waiving or saying, I'm going to move forward and my earnest money still belongs to the seller, basically. The next window of opportunity where there's a renegotiation that happens is at the appraisal point. So you can waive your appraisal contingency and you say, I'm just basically guaranteeing anything over my appraisal price, I'm going to pay that. But if you're in that contingency window and do not waive that contingency, then you can renegotiate. And both parties, either party can cancel at that time. And generally speaking, the money would be their earnest money would be refunded back to the buyer. So, but we're seeing a lot of people guaranteeing, they're waiving that appraisal contingency time frame, and they are guaranteeing that money. That's good. I mean, appraisals go back 6 months. Prices are going to go up. I mean, I just had this discussion with my broker. I mean, isn't that like overblowing the market? And he says, no, that just means values are going up. So the house that sells down the street 3 months later is going to be able to go on at that 350 mark that Ann was talking about, right? So you went on at 3, the next guy's going to go on at 350, and he's got the documentation to prove that the houses are selling for 350. If it appraises at that, or no, it doesn't even have to appraise. It's what it's sold at. Because we don't see the appraisal dollars. Nobody sees the appraisals. We see what it's sold for. So that then ups everybody's value. And so I don't want to get too wordy here, but yeah, it's still a good time to buy, as it is a great time to sell. And that's because of the low interest rates that are happening. When you're locking in at 3% or less than 3%, everyone here on our panel either has purchased a house at 6, 7, 8%, or our parents purchased at 8, 10, 12%, or even our grandparents probably were purchasing at 12, 13, 15% interest rates. Imagine that, people, a 15% interest rate on a 30-year mortgage. It's not going to happen. So that is why a 2%, a 3% makes it still the best time to buy a house, but you have to have patience. You have to have set realistic expectations, and you have to go in with the intent to buy the home and put your best foot forward each and every time.
So Christie, one other thing I want to say is it's important to get pre-approved so that you are ready to go. And another thing, not just pre-qualified, but if you're pre-approved, meaning you could come to me and we could send you through underwriting up to a purchase price of $250, let's say. So now when you go to buy a house, you could say, you know, we'll be ready to close you could close in 10 days. All we have to do is get, the important thing is the title and appraisal. You may have to pay more for your appraisal, but you can do that. And if you're doing a conventional loan with Summit, we can get you pre-approved for everything subject to title and appraisal, and we can get a $10,000 guarantee, so that that's backed by the company, Summit Mortgage, because that particular conventional loan has gone through our underwriting process. And now if we did anything wrong, it can't be about the appraisal or title, because we have no control over that. But if we did anything wrong and it causes the deal to fall through, we will pay the seller $10,000. So they would get the earnest money and the $10,000, and they can go put it back on the market. But that's also a nice thing to do. Okay, now Ben.
Yeah. So thanks, ladies. So we talked about the legal and the financial parts of the divorce process and separating. And so now, believe it or not, the guy is going to talk about the emotional parts of divorce and separation. Can you even imagine that? His wife is such a lucky lady. And so Ben, please tell us about moving on and after divorce or separation.
Thanks, Christie. And in my defense, I might have relationships and emotions in my wheelhouse, in my expertise, but I can't fix my toilet. So if we're talking gender roles here, you just have to understand our house is a little topsy-turvy in those areas. Here's what I want to say today. We've talked a lot about housing. We've talked a lot about financing for housing, and Ann talked a little bit about credit. That's just one piece. What Christie didn't talk about, because she'd have to talk to you for hours, is all of the other pieces. And if you're watching this because you're considering or contemplating divorce, or because you're in the middle of being separated already, or because you're trying to find a way through, you're going to have a lot of decisions to make, and they're going to feel like they all come at the same time. And at the same time, regardless of how acrimonious or amicable your divorce is. And my sister's going through a divorce right now. She's finally in the tail end of it. It was not amicable. She couldn't use Christie's services. There's a huge emotional toll when there's that much conflict and anger. But even when it's amicable, there's an emotional toll of a chapter of your life is ending. And even if you're both coming to the table because you both have decided this is the best way forward, there is still a grieving process that needs to be gone through. It may not be horrible, it may not be gut-wrenching, but it does require energy and time and effort. So you have this consideration of all of this energy towards taking care of your emotional needs. Then you have all of these decisions that you have to make. You have to separate out the money. You have to talk about the kids. You have to talk about the dogs. You have to talk about the prize trophy on the mantle or whatever else those important household items are. You've got to talk about the house. You've got to put all of this together and make a lot of decisions that will impact the next 1, 2, 3, 5 years of your life. And you may or may not have a lot of capacity to think that through clearly. And if you have the capacity to think that through clearly, you may be facing self-doubt and questioning your decisions and wondering, am I doing the best for me? Am I doing the best for my kids? Am I doing the best for our family? If you're setting up a co-parenting situation where you and your soon-to-be ex-spouse are planning on co-parenting and want to still be amicable, am I setting up those custody arrangements where not only is it equal and fair and just, but it also serves the needs of both of our new lives that we're working on? How do I carve out that space? This is why at least one legal company in the Twin Cities metro area requires their clients to have some sessions of what they would call life coaching. But it's really not about life coaching. It's about having a neutral thinking partner to help you parse these decisions and have some confidence and some validation that these are the best decisions from a logical, neutral standpoint. That's where I come. That's where we all come in, because right now we don't know you or your soon-to-be ex-spouse, so we're all neutral at this point. But where we come in is we help guide you through that process. So you use Ann to work through the mortgage. You use Melissa to work through the realty. You use Patrick, who had a family event happen, so he can't be here with us today, to help you sort through the insurance needs. You find a financial advisor, and if you don't have one, all four of us know a couple really good ones we can refer you to help you sort through the money. And you use people like me to help you sort through the overall pathway and the decisions you're going to make. Because you can't see what's going to happen 3 to 5 years from now. So you need people around you who have the experience to look down the road. Ann knows what your mortgage is going to be 5 years from now. Melissa knows what the ramification of that house is going to be 5 years from now. My expertise is in relationships and in helping people make the most of themselves. And I've been divorced. I know what 2 years after a divorce feels like. I know what 3 years, I know what 5 years after the divorce feels like. I remember all the mistakes I made and the missteps that I wish somebody would have been there to tell me, don't do that. That's gonna hurt. So you put all of this together and you have a team of people supporting you. John Maxwell would say, one is too small a number for greatness. And he's absolutely right on this. Every good, successful business has a strong team behind them. So why would you settle for anything less than having a strong team of support people behind you? That's all I have to say about that today, Christie.
I have to tell you, I quoted you earlier today and said, make sure that future you is happy with what you're doing today. And so that's what all of us are talking about, is we want to make sure that future you is happy with what you are going to do today about all these super fun decisions that need to be made during divorce: the house, the financial accounts, the cars, the household goods, the kids, um, and the debts. We want you to have as much knowledge as possible, because knowledge is power. When you try to make a decision without knowledge, it's not going to be a good one in all likelihood. And so that's why we want each other's clients to speak to the other and gain as much knowledge as possible. And we all offer free initial consultation, or free/no cost initial consultations. And because we want to get you started in the right direction. And all of our contact information will be in the post in the next 30 minutes or so. And we would love for you to reach out to us and schedule a time to meet with us. And does anybody have any parting thoughts? Actually, and you already talked about, I believe, how someone can improve their credit post-divorce. Or do you want to say a few words about that?
Mostly, I need to get in my license number. I am, my NMLS number is 211972. I forgot to say that at the beginning, and Ben reminded me, and then I forgot later. So improving your credit means paying your bills on time, keeping your balances, your balance at 30% or less. If you pay off your credit all the time, that's a great thing. But make sure that every once in a while you just need to, you can pay it off monthly, but as long as you use the credit card and let it go through, and then when the bill is due, pay it. That's the important thing. Instead of, spending $10 on the card and then going and immediately paying it off online, that won't help your credit. That it just won't. But letting it go through the cycle and then paying it off will help your credit score.
Awesome. Thanks, Anne. And thanks everybody for watching. And you have a great rest of your day.